Since the 2008 financial crisis, how progressive do you think UK banks have been in reforming their business support strategies?
Thank you, Huw. Well, firstly, I think they've struggled. I think the regulations that came out of the crisis of 2008, which put a lot of stress on their capital and their liquidity and the confidence in the economy, meant that there wasn't much margin to be made, and so they struggled to put a package together for the companies. So I would say that they've found it very difficult to find a market and to find the margins in a market that was collapsing. Okay.
Omar, would you agree with that? Reflecting on that with some of the clients you see?
Yeah, I'd agree partially with Rob's sentiment. When you look at how progressive the banks have been since the market dislocation of 2007 and 8, it has to be put within the context of the global economic environment and the constraints that Rob alluded to, particularly around the political and regulatory environment. Having said which, I think that the summer recess has had a number of commentators suggest that banks are turning the corner. My own view is that is true, but we're not out of the woods yet. It is true half one results were encouraging, and it is also true that there is a level of confidence amongst banks, bankers, born out of economic growth, which we are beginning to see, nascent as it is, but also write-offs are down, impairments are falling. You know, in the corporate world, in the corporate lending world, our research shows that write-offs are down from 1.7% in 2011 to circa 1.5%, 1.4% this year. But really importantly, what we're beginning to see, and EY research shows this, is that lending is growing again. And for the first time in a long time, that we are beginning to see that. So business lending next year will be up 7%. In 2015, will be up 10%. And in 2017, we'll have business lending of the tune of circa £602 billion, which is higher than the 2008 pre-crisis levels and 40% up on today. So at an industry level, I think we are beginning to see progress. But as was pointed out, that has to be set against the constraints that banks are still facing, particularly around capital. Everybody saw the PRA's recent announcements around the capital shortfalls in the industry. We've got higher cost of capital, higher total amounts of capital being put onto the banks. And then, of course, you've got the debate that is raging around leverage. All of that has to be put into the mix when you consider how progressive banks have been able to be. And I think that looking out, I sit here with a level of optimism with you.
Okay. Phil, can I switch to you? Level of optimism, kind of reforming of specifically business support strategies for I guess, small businesses over the last couple of years. What have you seen with your membership, Phil?
Well, certainly the latest evidence would indicate a rising level of optimism and confidence, I think particularly in the small business sector, and obviously that's very, very welcome. You know, there have been issues of the industry's own making. There was a significant retrenching in 2008. Certain markets were completely cut out of the lending environment, construction, leisure, and some other aspects, restaurants and hospitality. It's nice to be able to say we told you so at the time, but we did. We said that these were going to have serious consequences down the line, and we're still seeing some of that today. There are still industry sectors which are struggling to raise the finance that they need. And frankly, I don't believe that the banks have done enough in that sort of area to move away from sort of systematic computer-based systems back to a more relationship-based structure. I think there are movers now in the marketplace starting to try and bring some of that, and the sooner it comes, the better. I think just picking up a point on Omar's figures, I think overall lending, is up. However, small business lending, as has been demonstrated in the funding for lending figures just this week, indicate an ongoing decline within the small business sector. Overdraft utilisation is down. And generally businesses are paying down debt rather than looking to invest, and that from a growth perspective is a huge barrier ahead of us.
Mm-hmm. Phil, just picking up some of those with Birgitte, is not seeing very much innovation therefore in business support strategies, particularly what you're saying is certain sectors particularly that are slightly moribund, to say the least.
The winners of tomorrow who can grow with the economy. And just if you just look at data from, so for that's that's what good looks like. So just to look at data, for example, aggregate financial data for the Office of National Statistics, or publicly available data, we see that between 2001 to 2007, there was increase in total financial capital in 1,340 billion, but in the same period, there was of this money there was only 26 billion increase in funding for innovation.
So the challenge is, if I pick it up, is that Phil, quite rightly, you say there are sectors that the banks have been less supportive of through since 2008 through 13. Yeah. And then the counter challenge is, well, okay, so they've been less supportive of certain sectors where their models are showing them those high level of risk, but not supportive enough of where maybe opportunity.
Exactly. Yeah, you have
inflection points.
Exactly.
And opportunity.
The sectors and the businesses in the sector which will be growing the economy, will be stimulating all the growth. This is really where a bank should be focused. They shouldn't always just be focused on maybe large firms trying to repay debt, or so keep investing in growth, and that's what we want the banks to do.
I think if you look at the SME sector, and I'd define as an owner-managed sector, you know, the entrepreneur that's a decision maker in that business, they're creating 75% of all new jobs. So it's a vital segment, and it's an underserved segment. That's the reality. I speak to an awful lot of customers, and what are they telling us day to day? They don't know who the relationship manager is. They haven't got continuity. They don't. The people that are dealing with them don't understand their segment, their business sector, and their aspirations to grow. So I think there's a number of fundamental points about actually aligning the right levels of skill to the opportunity. I think your point's very valid. But, you know, make no mistake, there's a lot more demand out there for credit than we're serving, and it's slowing the economy down.